The widespread belief that investing is just for the wealthy is probably one of the most damaging misconceptions holding back potential investors. This gap between those who understood investing and everyone else seemed almost insurmountable before, but that's no longer the case. Companies and services today have made it their mission to level the playing field by expanding access to investment opportunities for newcomers and people with modest budgets. There's no reason to hold off any longer, as there are plenty of entry-level investment options, but we'll cover just a couple in today's video. With all the free investing knowledge and tools available today, now has never been a better time to become financially independent. So let's talk about investing concepts for beginners. One thing you should keep in mind: don't expect to learn everything you need to know by watching a few YouTube videos. Investing is a big field, and there's a lot to learn. The greatest, most successful investors are always learning and polishing their financial market talents. You can't learn everything about investing, or even investing for beginners, in one day or one video, but you don't need to know everything in order to start. So let's dive in a little deeper into some of the basics. Nearly all investments fall into one or more asset classes. An asset class consists of investments with comparable characteristics and rules. Historically speaking, there are three main asset classes: equities, like stocks; fixed income, like bonds; and cash equivalents, like money market accounts. Today, though, most financial professionals will also consider commodities, like oil and gold futures, real estate, and currencies as additional asset classes. Now, asset classes may be considered more or less liquid. This term determines how easy or hard it is to exchange the asset for cash. Stocks are a liquid asset. You can just log into your brokerage account and sell the stock today, but real estate is a little more liquid. You'd have to wait to sell the house before you could get your cash. Let's take a deeper dive into our first asset class: equities. Equity investing, the purchasing and selling of publicly traded company stocks or funds, is one of the best beginner investments. Publicly traded corporations provide investors stock shares for an equity stake. Companies can grow or expand by selling shares. This is doubly beneficial for people like us because we get an opportunity to own a piece of a great business while providing the financing that a business needs to develop new products and services. When that company's share price rises, shareholders profit from those price increases. When it comes to the price of stocks, the company's performance is typically the biggest factor on whether it will go up or down. For instance, currently in 2022, Netflix has missed its financial estimates for several quarters, and the market has seen its price share drop almost 65%. Other influencers on share price are industry performance, competitor performance, economic conditions, and government activities. Aside from share price, investors can also earn additional income through dividends. You can think of dividends like interest on stocks or a per-share bonus. To learn which companies are paying dividends, you can use a site like dividend.com, which lets you study and compare dividend-paying stocks. So where does all this buying and selling happen? There are organizations that govern and manage stock trading called exchanges. Examples of large exchanges are the United States New York Stock Exchange, the UK's London Stock Exchange, and Japan's Tokyo Stock Exchange. Fixed income investing. Investing always entails risk, and as an investor, you must learn your risk tolerance, how much or little risk you can handle. Generally speaking, the higher the risk, the higher the reward. But some investors don't like the risk of equities and may opt for a lower risk asset class. This is where fixed income investing comes in. Fixed income investing refers to investments in debt securities that offer fixed rate interest payments over a predetermined time frame. Bonds are an example of debt securities. The bond market is one of the world's largest due to the massive amounts of government debt. When you buy a bond, you finance a business or government and receive an interest rate known as a coupon rate in exchange. Bonds pay interest semi-annually or annually until the bond's maturity date. The coupon rate is the yield from the interest at the time it's issued, the time at which you buy it. Bonds have an inverse relationship to interest rates. This is because bonds tend to pay out a fixed interest rate. So when the cost of borrowing money is more expensive, when interest rates rise, bond prices tend to fall because consumers will like the higher interest rate of the market. But should the market interest rate fall to below the bonds rate, then the bond will look more lucrative to investors. More people will want to buy it, and its price will increase. Fixed income assets are popular for their minimal risk. If you buy these IOUs from a developed and reliable country like the United States, your return on investment is almost a certainty. Now, this is just a beginner's guide to investing, so all the asset classes won't be covered in full detail in this video. But let's talk about what could be considered the most common alternative asset investment: real estate. Real estate asset class is technically defined by real property, which simply means land and any infrastructure improvements put upon it, like a building, trees, etc. The three most common real estate properties are residential, commercial, and land. Investing in real estate offers leverage, meaning you can use a smaller amount of your own money to control a larger investment. Leverage lets you make a lot with a little, but if you're not careful, it can burn you. Leverage can amplify returns, but it can also amplify losses, so it's unwise to use leverage until you're more advanced as a trader or investor. Leverage investing requires careful money management. With leveraged investments, you can actually lose more than your total investment, unlike with stocks or bonds. There are a few better ways to lose all your money than treating leverage like a roll of the dice. Remember, you as the investor have to determine your risk tolerance. How do we invest? So we've discussed a few of the basic asset classes. These will be the ones that newer investors will most likely first start investing into. But how do you actually invest in them? Typically, to invest into stocks and bonds, you'll need access to a brokerage account. Vanguard, Fidelity, and Robinhood are just a few examples of brokerage account holders. They're the companies through which you can then purchase stocks and bonds. When you open a brokerage account, you will have access to the stocks and bonds on the exchange available through that broker. From there, you would connect your bank account and then set up a deposit from your bank into the brokerage. Once there was money in your brokerage account, you would then pick the stock, bond, mutual fund, or ETF you wanted to invest in and purchase shares. In the past, you'd need the full amount of a share, but today, with fractional shares, you can invest as much or as little as you'd like. For example, Apple stock is around $150. You could put $300 in and purchase 2 full shares. Or you can decide you only have $50 that you can invest and purchase what would be a third of a share. Within the real estate asset class, most people start by simply buying their first house. And when they determine it's time to move or buy a bigger house, they keep the first home and rent it out. This now becomes an income-producing asset for the investor. We know investing is a big subject, and the topic generates a lot of different opinions about the best way to go about it. So much so that it can seem very overwhelming for beginners. Sadly, most people never begin to seriously consider investing until they're well into their income-earning years. Our educational system lacks even fundamental financial and investing education. Be thankful if you're younger and watching this, but don't be discouraged if you're older. It's never too late to start investing, and the sooner you start, the sooner you'll go beyond investing for beginners and reach your financial goals. 2 things to keep in mind. Whether you're 16 or 60, learning even the basics of investing will put you ahead of your peers in terms of financial literacy and success. And you can create a lot more money a lot faster by sending your money to work for you every day. That brings us to the end of this video. If you learned something new today, like this video and share it with your friends. Please consider subscribing and hit that bell icon to get notified when new videos drop.